CMPRadio.net. It's the station.
Good afternoon. How y'all doing today? You know what this is. Stock Market 101. It's King Annias here. Just coming back to give some information to my people. What's up, Uncle P? How you? Good today? That's good. Out here today. Nice hot day. But I still got some information to bring to my people. But first and foremost, let me go into it. Let me let y'all know something. I am not a financial advisor. I'm just bringing this information to my people to give them a better understanding about the world that's going on around them and a little bit of the world that I understand. I'm just trying to bring you that information. What you do with that information is what you do. If you pull yourself forward with it, make a couple dollars, good for you. If you got the time to, give it back to your people. If not, build something great that you can give back to the community with. Outside of that, I'm just here to bring y'all this information that I got. I got a ton of it on, and we're just going to go into a couple things real quick. So last week, 2 weeks ago, prior to us getting off the air, Uncle P proposed the question, like, what is the stock market? That's really what I'm going to go into today in this episode and really what it is. So just to let you know, what is the stock market? Basically, it's a marketplace where buyers and sellers can publicly trade the publicly listed companies. What is it? And really what it is, it's a system, not a physical place. Everyone gets confused thinking, it's a big building up in New York where just you have thousands of people swinging papers and things like that. If you watched Trading Places back in the day, which we all may have, it speaks to the stock market. And basically what they was trading, the big thing they was trading at was orange juice. But with that, it's basically just a physical place, not a physical place, but a place where stocks can be bought and sold. What we were looking at in Trading Places was called an exchange, which we know is the New York Stock Exchange and the NASDAQ in the United States. It operates like any market. The prices are set by supply and demand. Now, what you mean by supply and demand, I'll give you an example. When Nintendo will roll out something new, a new product, they will put a limited supply out there, and realizing that supply being limited, the demand is high and people are buying it real fast. So they'll look at it like, okay, we should increase the supply. If we increase the supply, will the demand increase? Yes, 9 times out of 10, depending on what the product is. And it's basically how it goes. Basically what it does, it helps companies raise money to share, raise money by sharing shares to the public like me and you. Everyday people that can find a way to invest and grow profit in business growth. It reflects how investors collectively feel about the economy. So right now, a couple stocks that I'm following, Rivian is one of them. They just said their stock fell down to $16.18, meaning that one stock is $16. So you can buy about 3 stocks, have that sit and wait and see if it grows. It may diminish, it may grow. But it works is in this way. The more the people that buy the stock then sell it, the price goes up. The more people that want to sell than buy the stock, the price goes down. Basically breaking it down as if I buy this stock, rather than I sell it, the price will go up. So more people buy it, no one sells it, price increases on this stock. Meaning that one stock that I bought for $16, depending on how many more people buy it at that rate, it may go up. Now, meaning that next time that I may want to buy that same stock, it might be $26. I made a $10 gain. We'll get into that later. So, next, trades happen in milliseconds through electronic systems today, meaning your phones. When we went off the air, Uncle P asked me, what stocks do I have? And I told him what I had. So he may have gotten into it, saw what I had, saw how much it was, and bought a stock right then and there. That doesn't mean that someone else that was listening could do the same thing. This happens in milliseconds. It's constantly moving, constantly running. So the key participants are individual investors, everyday people that buy stocks like me and you, institutional investors like big firms like pension funds and hedge funds. We'll get into that later. Also, market makers, firms that keep trading flowing smoothly. Get into that later. And brokers, the middlemen that execute trades. Now, the brokers is what you saw in trading places. That's specifically what those guys were. They're on the floor. They're communicating with people, communicating with the individual investors, communicating with the institutional investors, communicating with the market makers, and making those things happen right then and there live. So that's what the brokers are. They're the middlemen. A lot of those middlemen now are becoming digitized, used by AI, things of that nature. All right, the common ones that we know about are the SP 500, the Dow Jones, and the NASDAQ. These, what they do is that they track the overall growth of the market and average performance and how stocks grow. Think of it as a giant continuous running auction that happens every day between 9:30 a.m. and 4 p.m. Eastern Standard Time. So that means that that means that over in California, let's say for instance, it's 9 a.m. over there. Over here, we're like 4 hours ahead. So that means it'll probably be like 1 o'clock. My time may be off, but someone over there is buying at a certain time. They have until their time, matching our time at 4 p.m. to buy. So if you notice, if you use any of your applications that you want to buy stocks from, it may say if it's done after 4 o'clock, literally after, it could be 4:01, it will say this trade will take place the next business day. If you do it on the weekend, it's the same thing. It'll happen live first thing Monday morning. So now we know what the stock market is, but where do stocks actually live at? And I'm going to fully explain the full stock market itself. The market isn't just one place. The market is everywhere. As I said, the market is literally on our phones. It's on our tablets. Anywhere where is that we can access the internet, we can access the market. We can access and sell. Now, the first thing is the New York Stock Exchange, or NESE. It was founded in 1972, yes, over 2,000 years ago, and it's the largest stock market in the world by total value. It's located on Wall Street in New York City, and a trading floor, and the famous trading floor that we all see as we saw in trading places. Companies like Coca-Cola, JP Morgan, Walmart, Target, Ford, any company you can think of that is publicly traded is there. Second is the NASDAQ, which stands for the National Association for Security Dealers and Automated Quotations. Yeah, it's a lot, but that's why they call it the NASDAQ. It's not that there's no public trading floor, but it's an electronic one since day one, and it's a national home for tech companies. So that means that there's a separate area for everything. The NASDAQ holds, our bigger businesses, Walmart, JP Morgan, big banks, Walmart, big businesses. And then we also have the digital side, which is the tech side, which is Apple, Microsoft, Google, Amazon, and Meta. They're all on the NASDAQ. Now, as a beginning investor, there's no real difference between the two. Whether stocks on either platform, you buy them the same way through a brokerage app, which is what we use today. which is the the Robin Hoods, your Cash Apps, Fidelity, things of that nature too. So there's many ways to access it. Now the stock exchange, as I said, is a marketplace where stocks are officially listed and traded. Think of it like a farm, basically. You go to a farm, you buy different vegetables, different things that are in season, different things that are growing and moving. That's the same way how it is done. People buy, they're selling pieces of companies. I mean, you can go on right now and buy whatever's listed. And also there's also exchanges around the world too. There's London Stock Exchange, Tokyo Stock Exchange, and many more. Also, some of those listed on one exchange may not be listed in the other. It's just basically how it works. And sometimes you'll have one that wants to come over and be listed in ours to get some of our capital out, some of our gains over here. So, where does the buying and selling actually happen? Let's say, for instance, you want to buy one Apple stock. You go through your apps, Fidelity, Schwab, Robinhood, whichever one you like to use. I played around with Fidelity when I was working for a big business company, and I also had Robinhood for myself, which is all listed on that, which is listed on the NASDAQ Stock Exchange. The other side of that trade is someone else deciding to sell you that one share of Apple that matches the buy order, which the exchange will match the buy order, which is me buying it, to their selling order, and that's where the trade happens. Just like that, you own a share of Apple. So basically, they're selling it for a certain price. I'm just saying, for instance, I'm not giving you the real listed price. Let's say Apple's stock is $15. Somebody there is selling that stock for $15. I say I want to buy that one share of stock for $15 from you. They take my $15, give me the access to that one share. Now I own a share of Apple for $15. It sounds simple enough, but it happens in a millisecond. It only works that way, and if there's enough buyers and sellers in the market at that given time. That's what called liquidity is. One thing about the stock exchange that is so big that it moves, and it's so valuable that it moves at any given time. That's why most people are always buying and selling stocks quickly without the price moving too much. So, for instance, if you're looking at the ticker, we'll go back to the first episode where we talk about the listed price. The first price that you see is the listed price. That's how much the stock is actually worth. And you notice that over, I say maybe 2 or 3 decimal points over, you see the numbers constantly going up and down. That's what that means, whereas that it's moving so fast that the price doesn't move too much. Meaning that at 1 millisecond, that stock for me was $15, right? And I paid that. Let's say Uncle Pete jumps on and sees the same price. Let's say, oh, I can get it for 15. Like, Malcolm got it for 15. Oh, I'm about to get that. But let's say he does more than what I do. Let's say he buys 5 shares at $15. Then the number jumps up to $20 a share. But he got his shares at 15. That's how fast the market moves. That's how fast it becomes. That's how fast it ever changes. Because even though I sold it at 15 and just bought one, he sold it at 15 and got 5. That means it wound up jumping because of what he wound up buying. And other people were doing the same exact thing. That's why it's simply called supply and demand. That's why this price changes. And it also goes off of a few things too, outside of us just doing just the simple buying and selling a stock. It can go as more as just what actually is going on. So basically, what drives the price? Company's performance. If Apple reports record profits, people get excited, they want to buy it, the price goes up. As I just said, just presented to you. Uncle P wanted to buy that, seen that, and was like, oh, that's a game changer. I'm going to jump on that. That's easy. I got that money lying around. I'm going to get that. Oh, people are buying it. They're excited. Yeah, we're going to do that. We're going to buy that. That's the same thing as with these announcements. As if you notice that a lot of businesses around certain times of the year, they have announcements. Samsung just did their announcement for their new phone. People were excited. People wound up buying the stock. The price went up on that stock with Samsung. The same thing will happen with Google come August when they make their announcement. Another one that actually sways prices is news and events. If a company gets hit with a major lawsuit or a product fails, people start to panic. People will sell their stock. The price goes down immediately. Now, even with that, that's where that comes in, where it's that you're watching the news, paying attention to what's going on around you, and really seeing on what actually happens. Also, the broader economy. If there's signs of recession, investors do get nervous. across the board, and the whole market could drop, meaning that stock prices could just plummet. That's one thing that we realized during COVID. Some of us that were hip to what was going on and paid attention jumped in and bought stock in AMC, paid attention and realized we were stuck in the house. People were always gaming and doing these different things. People bought stock in GameStop. Also, people paying attention to the meme stocks and buying those and selling those off. It's all based off of those things that we see around us. Simple news, simple words. Simple words, simple posts can change a lot of things in the stock market. Also, investor sentiment. Some prices may move just because of how people feel, and there's nothing concrete about it. The markets are emotional, being it moves off of emotion. Someone can post something on X, aka Twitter, right now about a big business. People will probably feel some type of way about it, and then they might sell their stock. Others may feel against it and buy and purchase it. It's the same. It's basically the same thing as art, and I'm gonna play it to you just in that nature. It's like art. Art over time gain more money and value, but then art also in the same kind can depreciate in value also. It's all based off of the literary works and information about that artist. One artist that I follow that's all around us right now, especially in the city of Chester, is the Art Monster. I mean, I've been seeing his art almost everywhere within the city. I've been seeing his art in people's homes. I've even seen his art outside. And I can tell you right now, his stock price is going up because the more people that see it, more people that invest in him and purchase that piece of art, that next piece is worth 3 times as much in value. But then also with it hanging on your wall and you keep it in a certain way and condition, somebody may come in and see that and ask you, what piece is that? You let them know what the piece was. Oh, how much did you pay for it? You let them know. They may come off and say, you know what? I'll give you triple time. I'll give you 3 times that amount of money that you paid for that piece because I want that piece in my house. Same way how the stock market works. Simple investing. Simple investing, simple seeing, and just talking about it. Now, what are stock niches? Now, this is something that really I just broke down if you really understand it. I'm going to try to bring it down to you a little bit format as well. You eventually hear people saying, oh, the market was up today or the Dow dropped 500 points. But what does that actually mean? That means the index, the number that's being shown, created for the list of stocks, represented as a slice of the market, meaning it tracks thousands of individual stocks and tracks the number to single index, and it tells you how the market did overall. So, for instance, let's say multiple stocks are on the market, multiple stocks are moving, and then majority of those stocks drop. Instead of you sitting there saying, Rivian dropped $15, dropped to $15, Apple dropped to 10, it's just overall quantified number of how it fully performed. It didn't do well, everybody dropped. Things you constantly hear is the S&P 500. This tracks the 500 largest publicly traded stocks overall in our nation. So basically, what are the top 500? I'll give you a list of it. Give me 1 second, y'all. So, the full list. The full list is basically it's an index fund, meaning it's a group of stocks all together in one of the 500 top ones, and they're just traded equally in that nature together as one. Meaning you can still go out and get an individual piece of it and doing it that way, but majority everyone does it in a group fashion. Next is the Dow Jones Industrial Average, which tracks the 30 largest well-established American companies, and it's the oldest one that covers only 30 companies. It's considered a small snapshot of the S&P 500. Then you have the Nasdaq Stock Exchange that has over 300 companies. Most of them are tech companies, and they're all seeing the barometer of the tech sector. That's just basically how they are how they're measured together as one. They're just measuring tools. We could talk about the index funds and how they mirror each other, and that's basically later on when we talk about each specific way of trying to invest in the stock market. Lastly, what I got is basically, why does the stock market go up and down? And to be honest, it's unpredictable. It's literally based off of news, emotions, economic data, global events, things that make sense, things that doesn't. That's why people are always trying to predict how the market works on any given day, and it's impossible, even for somebody professionally into it. They can't even give you information on it. But one thing I can say is that if you are a day trader, which those guys, I can say, y'all, that takes a lot of risk to be in as a day trader, because you got to really pay attention to what is going on at the Pacific peak and Pacific point when the stock market open. Also being able to dictate and follow different trends by watching how a stock performs. Once we get it fully established with everything, I may be able to show you clips of a stock itself and how it's performing, and just by going over, what you see, what you may predict could happen with that stock. It's the same way as what we do with gambling. We're predicting that someone's going to do something specific in a game. For instance, when we're watching football, we'll predict somebody will go for a certain amount of yards, will throw for a certain amount of passes, and someone maybe get some sacks. That's a prediction. Going through with that prediction, we may win, we may lose. It's the same thing when playing around with stocks. You may predict a stock's going to go up. You want to buy the stock right now at a given price. Lo and behold, the stock doesn't perform the way it does. You wind up losing money. But then on the back end, it may increase. It may also gain you some money. So it's basically going over a long period of time. Stocks and the stock market has history trended to go upward, but there's been crashes, recessions, bear markets, and scary headlines to overall depict the direction. But overall, it's been going up. And it's like a hike up a mountain. The path is never straight. There's always dips. There's changes, switchbacks, rough patches, forks in the road. Sometimes you guys got to make a decision. Sometimes you got to look inward to see which way you need to go. Sometimes you got to step back and look at the bigger picture to see which will be the better way. But either way, you're still going up. That's basically how the stock market is. Basically, it's a long view or long game. Sometimes you got to play a long game with a stock. I've been playing that with what I've been having. It hasn't peaked yet, but I know it will if I keep cultivating, keep investing in it. I know I'm going to get something out of it because it's going to keep going up. But that's the real mindset of a beginning investor that you can make. But we'll get into that even more so. But let me give you on a recap of what we did today. First, the stock market is a system. It's not a place where people like to buy and sell and trade stocks. The two biggest exchanges, the NASDAQ and the New York Stock Exchange, prices move based off supply and demand, based off of company performance, based off of news, based off of economical conditions, based off of investor emotions too. You can have an investor wake up one morning and say, you know what, this ain't working out. I'm going to sell it all just because. And people will sell it. Other niches are like the SP 500, the Dow, and the New York Stock Exchange Composite, which way to measure how the stock's going overall. So next, we're going to get practical. We talk about how you can actually buy a stock, what a broker is, and how to place an order and what the numbers mean when you first see the stock for the first time. And like I said before, I welcome y'all to this new endeavor that I got going on. I'm not a financial advisor. I'm just here giving y'all information about stocks because it wasn't broken down to me. I wish it was at a younger age because then I'd be talking to you at a different height, a different way, but still giving back. But this is my way of giving back to y'all now so we can all elevate together. So I thank y'all for tuning in, and we're going to get ready for episode 3. I thank y'all.